Greetings and good day. I hope you're doing great. I'm with you for the daily Ethereum analysis on April 29th. Last week, we saw Ethereum's price reach the weekly FVG area again with about a 5% growth, but it failed to reach its previous week's high and closed around $2,375. With the start of this week, we've seen a sharp drop in Ethereum.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
Ethereum's price over the last 2 days, but today Ethereum has managed to recover some of that loss. With the drop over the last 2 days, the price reached its low from last week and reacted to the $2,260 level. Then we saw buyers support the price in this range, and currently, this price area will be the most important medium-term support level for Ethereum. Currently, the price is trading around $2,323. We're examining the liquidity inflow and outflow for Ethereum ETF funds. Here we can see that last week, Ethereum recorded its third consecutive week of capital inflows into these funds, but with the start of this week, we've seen outflows over the last 2 days. Also, on this page, we can see the Fear and Greed Index. This index is currently at 42, placing it in the neutral zone. We're looking at the 4-hour time frame. Previously, we drew this ascending channel for Ethereum's upward movement. However, as a result of the significant price drop last week, the price actually broke out of the bottom of this channel. Also, after the price was consistently making higher highs and higher lows, it broke one of its main lows to the downside, which we can consider a bearish change of character. But as you can see, at this stage, the price hasn't yet managed to create a higher high or a lower low, making decision-making harder for traders. If we actually see the price of Ethereum close below the previous low, then that is what we would consider a clear bearish break of structure, and it would serve as confirmation for the potential start of a new downtrend for Ethereum. But in yesterday's price action, we can see our strategy number 4 here. The price approached a key level, which is last week's low, with consecutive bearish candles. In the last bearish candle, we see the price couldn't go lower than the previous one, and in the next candle, a manipulation phase occurred where the price dropped to sweep liquidity from previous lows before bouncing back up. Seeing this structure, we can enter a buy position. We'll place the stop loss slightly below the candle shadow and can target risk-to-reward ratios of 1:2 and 1:3. Now for the next prediction, let's check the Ethereum liquidity map. As mentioned, by dropping down, the price collected significant liquidity from the $2,262 range. However, there's still significant sell-side liquidity below this range, particularly at the $2,240 price point. Today, Ethereum's price has begun an upward trend, and we anticipate it will move toward buy-side liquidity targets, reaching around $2,347. We should also note that we'll have internal liquidity in the $2,310 range. We're currently looking at the 1-hour time frame. As mentioned, we're maintaining a positive and bullish bias for crypto today. So, as a trading setup, if the price, after establishing this new high, can reach the 1-hour unicorn zone in a corrective move and collect the internal liquidity we mentioned, we can then look for a buy position entry by analyzing different strategies and target levels like the previous highs. Good luck and stay profitable.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.